Good afternoon, good morning, and good evening to Ethereum millionaire with a side hustle on gold, because I highly recommend all of my followers, friends, family, and fellow cryptocurrency hodlers to also be a gold and silver hodler and a bug, because you will need it just as you will need cryptocurrencies as the U.S. government inflates our assets. But I digress. This is part 2 of our technical analysis, kind of the method to the madness on how we come up with where we think the price is going, with very accurately, I might add. And these aren't just all random lines. In the previous video, we went over what those two blue lines are in that rising wedge, the thick blue lines that seem to be angling towards each other. That was a rising wedge after a parabolic run up with falling volume after the peak, and a consolidating, restricting price would indicate that the price was going to fall. But you always want to go on the monthly time frame to get, because all charting is, and technical analysis is looking at the price movement and where it came from and where it looks like it's going based off prior action. You know what I mean? So you got to look and see what the overall big move is doing, right? And in the monthly time frame, which is the biggest scale we can look at this in, you can see the red line. That red line from 2012 to middle of 2000, latter part of 2017, 18 was ultimate support for years, and finally one day it broke it, and then it came back up about a half a year later in a big move up and got rejected off of it at $14,500 when everybody thought you were about to have the second leg to this massive bull run. Well, it was meeting ultimate support now. If it was 7 years ultimate resistance, if it was 7 years ultimate support back there, it's going to be ultimate resistance now, and it was. You got rejected, and big time rejected, multi-year rejection, and you didn't actually come back up and run back into this for 5 years. You know what I'm saying? But off that 5 year looking like crypto might be over, you could have already known, if you extrapolate out far enough to when you think a Bitcoin parabolic move up is going to be, you can kind of get a guess where you could top out at, you know, because this line up here, that red line, I did not change. It was just drawn out into the future. That line got drawn out years ago, and it's just drawn out into the future. Now we're into the future, and the price finally recovered enough, and we were fortunate enough that cryptocurrency showed and proved its resilience, and it is here to stay. When we finally came way up to 60,000, we pretty much got rejected off of that line. If you look at it in the monthly time frame, it hit that. In the minute time frame, it doesn't show it for some reason, but the monthly it does. I mean, you just got rejected, constricted, and started trading sideways off of it. So you could have already had a data point off of a bull run starting from anywhere south of that line to saying this is going to be a big resistance area, because it was a 7 year support line. You know, it's not just going to go blow by that after 7 years of support. A 7 year flipped resistance line is not just going to be broken. You're going to have to trade sideways. You're going to have to consolidate down. Trading's going to have to commence. Buyers, remember to like, subscribe, and share the video, and comment below. It really helps the channel. It helps me get the word out. It helps me teach you more. If you got any questions, you know, feel free to put it down there. But it helps you to know where the price is going to go. Just like this red line. It's not a random red arrow down. After the price finally peaked out at just about 65,000 and change and crashed its first 20% or 15% fall from its high, it came and traded back up, if we zoom in, and it got rejected at that red line. And now that became a resistance line. Then it crashed again after hitting it 1, 2. Here, we'll pull our little pointer up. 1, 2, 3, 4 times, and then crashed. Then traded down here, and then when it came back up here to test it again, it had to trade off it for a few hours, and then it blew by it, right? And then the sell volume picked up, you can see down here. But then after the price skyrocketed when the buy volume came in, because a lot of those orders got liquidated, because there's a lot of margin, you guys all know this, but there's a lot of margin in the crypto world. So when the margin starts getting liquidated, the price can fall very fast. But as soon as the liquidity comes out, because they're just borrowing money to buy more of their own stock because the price was going up. So as the price goes up, as you're up more and more percentage, you can borrow more and more against, what you're up on paper. But as soon as the price flips and goes down for a little while, your margin becomes weaker and closer and thinner. And then eventually you start getting margin called because you've lost too much money in comparison to what you have on leverage. Well, that all gets sucked out. Buyers come in. And then you get a relief rally because this is what happens. But you can see as soon as you did that, the volume immediately, as the price jumped up about $5,000 or $6,000 really quick, the volume tailed off, and then the price started trading upwards and sideways in a smaller version of the monthly pattern that we just broke out of, that we were talking about in video 1. You go take a look at that and like, subscribe, and share it. But it's got a lot of information. It's very valuable. It's a must-watch video, and it piggybacks into this video to get you to understand what I mean by how this did the exact same move as our parabolic move, just in a smaller form. Then the volume fell, price consolidated upwards in a tightening range, and then finally broke it and came down. Well, then you can just draw out prior support and resistance lines and find your targets. So that's why we think our green line is our next target, 51,677. And if it bounces off that, your next target up would be this former support line, which would be a local short-term resistance, right? And then it would fall back. And that's where we think it's going. And then after you fall back even more, the local daily or 4-hourly resistance point would now likely, when you break this and dance around, we don't think we're just going to break this 51,000 line. We think we're going to fall down to it pretty quickly, and that's where we're going to today. And then we're going to dance around it. Could even come back up to this green line, like I said. But I think we're ultimately got a retest, which would now be a support line that was an hour time frame resistant. Would now be support, and we think we'd bounce off that with some buyers there, because the buyers know that, the technical analysis people, the people that the big money knows where that line is. Then you would probably get some kind of bounce off of that, which is what we're thinking here, and come back up and now test this prior support as overhead resistance, and we think we would get quickly rejected, if not a quick fake out above it. You always got to look out for the fake outs, 1, 2, 3% above where you're looking at, because you're looking at it, they're looking at it, I'm looking at it, we're all looking at it. So it can't do what everybody thinks. It's got to try to trick as most people as they can. So you probably think maybe $1,000 blow by, but a quick sell off right after that, after people think, oh my God, it's going up. Then you get rejected off that, come down, trade a little bit back and retest this, break that, and come down to $43,000. And like, from the last video, $43,000 is the bottom part of our rising wedge. And that's, that's what we broke out of in the monthly time frame, a 3-month pattern. So that's where we're going. So we have to go at least finish out that pattern. So that's where we think we're going. And if you kind of like, subscribe, and share, like I said, but you can kind of see how, if you just break this down break it out to the largest time frame you can look at it in. If it's a monthly time frame, look at it in the monthly time frame. You know what I mean? And then see what your long-term support and resistance lines are vertically and horizontally, and then get into the smaller time frames, the weekly, the daily, the hourly, and then if you're trying to day trade, which will give you guys alerts. If you want to know about certain coins, a buy spot, a sell spot, send me, comment down below. Don't be shy. Click that notification and let me know what you want me to look at, and I'll tell you and set up a nice chart free of charge. I'll set up you a nice chart on buy and sell points. You know what I mean? So you just got to talk to me down there, because this stuff is not that difficult. And if people are telling you it's difficult, they're lying to you, because they want you to feel like you need somebody to teach you this at a professional, high paid level. You don't need that. You just need someone to break it down simple for you and explain to you what is actually going on here. And we can do that. And that's what we're doing here. And like, subscribe if you think we're doing a good job with that. But that's why we think we're going down there. Now, another big question would be, currently the Bitcoin's down almost 3.75%, roughly $2,000, at 4:15 Central Time. But you got to ask yourself, was that move, the 28% crash down off of long-term resistance, was that the start of a bear market? Because Bitcoin's notorious for having 6, 12-month massive bull runs, followed by a multi-year painful bear market to drive out the weak hands, which all markets have to do, and to drive out the people trying to get quick money because they've seen it at all-time highs, and then all-time highs, and then all-time highs. But we won't know that until the weeks, the days, the weeks, and maybe even the months play out to see how quickly this bounces back, because this could bounce back quick. Because if you look at it, you could say, well, in the 4 hourly, you could have a shoulder, a left shoulder, a head, and a right shoulder forming, which you would bounce down here perfectly and then trade up here along it. And then a neckline would be somewhere around 55,900, test it, and then you could blow by it and make a quick run back to all-time highs. It's possible. Do I think it's probable right now? No. That's why I put out that massive trading alert right before this market started rolling over. But it is possible that we could retest the all-time highs. But I think we're going to go down first because it was such a big parabolic move up. I think we have to have a relief, at least short-term bear market. What I mean by short-term, a few weeks to a month or two at the most. Maybe a 45 to 50% total correction. You've already made almost 30% from the top on that first crash. But I think we can get down to 35,000, 30,000. But, you gotta come back on it. I'll update you every day. We got to pay attention to this because within a bear market, just like you've seen Sunday into Monday and really peaked on Tuesday, you can have some of your biggest moves up in a bear market because they got to fake out some people and get them to get excited back into the market because everything doesn't just go straight up or straight down. See what I'm saying? But that's what we're gonna do here. I gotta run. Remember to like, subscribe, and share the video. Comment below. Give me suggestions, what you want to hear, what you want to know. We go on the monetary and fiscal policy because that relates to long-term holding of cryptocurrencies if the dollar devalues. So remember to like, subscribe, and share. I'll elaborate on this video from what I elaborated off of part 1 on part 3 of this video. But for now, that is Ethereum, a millionaire with a side hustle on gold. Peace out.